where were the trade opportunities? This, I think, is the bigger trade opportunity here. In the euro, patience and planning. Of all the markets, we know that the equity markets are weak. So we know that a continuation is potentially there. From a technical point of view, and we've seen this so many times over the last year with the ECB, that once the press conference starts, once the information's out there, then markets take their own turn. The euro was starting to look rather weak. We've had a very, very strong run recently. We topped out, and the last 3 days we started to drop and shift value lower, including this morning. On that first move, we got the chance to go higher, hit the trend and back off. So there's your first clue that this perhaps doesn't have that much more in it. Get back into this range, and this is what we talked about yesterday. Into this range below 112.20, you had the scope to move right the way through the range down to around about 111.09. Midpoint of the range, high volume, comes in at 11.51. That was your sort of most straightforward trade opportunity. Now, what made this an even better opportunity, and if you had the patience to not get overly involved in this middle or this very first chop, this is what we were left with. So this was the 12.45. The press conference starts around about here. At that point, the euro had got itself into a rather nice little range. Now, the break of the range is going to be key. This could have gone to the upside, gone for that trend break and kept going. To the downside though, this range was holding just above 20 or just around 20. The break of 20 was then your opportunity. The break of 20 was then the chance for this move down towards 50. So 50 coming in around about here. What was really nice about this, and I'll show you this move, is that this move finishes off with quite a quick splash down right towards the level, so it shows exhaustion. I'll show you what I mean on the ladder on this one. So here we go. So euro right now is getting right down onto that level. We're just pushing through 20, and this is where you'd be looking to get into the trade. Anything below 20 now is going to be your chance to get into the trade here. And what we're then looking for is this to steadily continue. This is the break of the range. This is just here. Here's your opportunity. The great thing about this is you're getting the chance to break the range, but also you've got the lows that we achieved just after the ECB coming in around about 01 area. So the break of 01 is your opportunity for this to continue towards the downside. That's just what you want, meaning that anything below 20 is a chance to sell. That's the opportunity that you're looking for. That gives you your chance to sell. Waiting for the break of 01 for an acceleration. So there we go, down to 01. If you've got in at 20 here, this is where you want to be holding on to this trade, and your focus now goes on to, right, stay in the trade. We've got some low volume here at 07 to try and help you stay in. We've seen decent bit of volume at 05. So happy with this trade now, and this is where you should be thinking, okay, if I've got in at 20 on the break of that block, waiting for 01 to break, your target's now down at 50. Remember, this is a central bank day. There's a lot of people involved in the market. There's a lot going on. There's a lot of volume that can start getting pushed through. Now we start to break. Now the pace picks up. You need to bear in mind and keep in mind where your target is here. We had a very quick little flow through that area. And then we continue to come off. Perfect. This still would not be a reason to start rushing for the exits. your target is still another 30 ticks to the downside from here. So we're down towards 78. And this is where we start to fall into a little bit of consolidation phase. Those watching the ladder though are going to see that once again, we're starting to get this lower volume here, and we're getting a little accumulation of volume in the low 80s. Push up through the low volume, a little flick up towards 86. Move starts to steady up a little bit. So this is just coming in down here now, and we start to sit in a quieter phase. Market starts to bounce sideways, still not putting in a great deal of volume up in the mid 80s. This is the area where it tests you. This is the bit where if you don't have or don't maintain your target, it's quite easy to get caught out here and start thinking maybe it's not going to work, maybe I'm not going to get paid on this trade, maybe I should come out at 80. Remember what your trade is here. We're now 40 ticks on side. Give it a bit of chance. If you end up getting stopped out in the low 90s because it's traded back through this area of low volume after consolidating here, that's fine, you've given it the chance. You're still on a winner. But right here, as it starts putting in more and more volume, as long as it's not getting back up above 85, 86, you've got a chance to add on. And then you're still looking down towards 50. So maintaining your view as to where this market's going is really, really important. So the move, this is where it steadies up and you expect this. And I talk about this often, the importance of understanding how a move's going to develop. It's not just going to straight line. Just because you'd like to sell 20 and get out of 50 doesn't mean that the market's just going to straight go there. So what you have to think about is, okay, when it starts to stall, what am I going to do? How am I going to deal with this? And the way that you're going to do that is by recognizing this. Having watched numerous of these, you'll start to recognize that this is quite a typical pattern, that most markets will drop, have a pickup in pace, and then stall, and then continue a move. So in this stalling phase, one, it's a matter of patience to hold on, but two, also, this can be your opportunity to get in. You can have a tighter risk here above the 84, 85 area. That's your opportunity to get in. Now we're looking for the next leg. As soon as it breaks away, so below 80, out of where the volume is, now you're looking for the next leg down. And so each of these little pushes away should be your chance for more. And your chance to start thinking, yes, I've got this. I'm going down towards 50. 15 should now be in your mind. Yes, you've got 160 lot at the low. Again though, let the market show you where it wants to go rather than focusing and changing your mind based on someone who's got 160, 170 on the bid. So back up towards 80. That's where the volume was previously. So this is still in your sell zone. It's still lower than where you would have sold it if you were waiting for this or waiting to add on. Pushes back, straight back down there. So now you're watching this 160. If it trades into it, this is more one that you're looking to trade into it and then push through it. So that 160 is also dropping. We've got a little glitch on the ladder there. Now it's disappeared. Keeps coming back, keeps disappearing. Possibly not even real. But it's very uncertain on where it wants to trade here. This could be someone just trying to get themselves a few last fills before the break. There we go, trades it, trades 300 there. No bounce. That's really important. When you trade for a 300 and you don't get any bounce, this is a sign that the sellers are very happy to sell here. Now the move can progress. Now we can keep on looking for a further move to the downside. Keeping in mind where that 300 was at around about 71. As long as we stay below there, it's all looking okay. Now we're down towards the low 60s. That was quite a quick, sharp snap down. Looking towards 50 now. 50 is your target. You can either have a bid here or you can watch the way the market comes down with a possibility that we shoot through. Remember, there's a lot more going on at the moment. Stall at 50, that could be it. That can be your out there. We start to stall, it's already your target, it's already your plan. You can come out at 50. Little push through. We have got a lot more volume on this candle as well. So a little bit of push through. Starting to stall once more down here. Another 160 comes on the bid. The fact that we're down at your target anyway, this would be where your reasoning or your tolerance to stay in the trade is lower. Anything that suggests that you can get out down here could be a decent area. So front running that 160, the push through, as soon as it came back above it though, that's a very good indication that this could be the end of move. That was not what we saw the first time it traded through. There's your indication, back up to 50. So if you get out there, you're still in the same position as before, just giving it a chance to go further. So the important thing today, I think, and one of the biggest takeaways is even with huge hype, huge movements on any kind of decision, a patient trade, particularly when it's not clear exactly what you should do with the information given, a patient trade then still plays out well. And the fact that you've got so much more volume in the markets have been moving so much more, means that these patient trades still pay out with very decent targets. 2-3 weeks ago, a 70 tick move in the euro could have taken 3 days. Now we're seeing them develop in under 10 minutes. So keep that in mind, particularly with the sensitivity at the moment. I'll wrap it up there for you guys. From the perspective of, are we likely to see something like this again from the ECB? I would say this is not going to have too many similarities to anything coming in future, but take lessons from it. Perhaps one of the biggest lessons is when it's unclear what exactly the decision's going to be and what exactly the market is expecting, overly enthusiastic early action can be quite dangerous. And just because you've done the preparation doesn't mean that you have to trade. Wait, let the market play out however it's going to play out, and then take the trades on. That trade came over an hour after the initial decision and was perhaps one of the clearer and easier trades to be taken on the day.